MG the Mortgage Guy, Matthew Garland, NMLS number 58700. So, Saturday, I'm here in the office. We're hitting up Chicago tomorrow for the DJ Envy and Caesar Real Estate Seminar. So, if you don't have your tickets, there's less than 50 remaining. Make sure you get those tickets. All right. Now, I was just on Instagram Live and I decided to come on over here to YouTube because we were talking about, cash out refinance. What's up, Annette? What's up, everybody? I can't see your questions. I can't see anything right now. And I'm going to leave it like that on purpose just so I can get through this quick lesson because I'm going to make this a very quick video about cash out refinancing. All right. So, like I was saying when we was on Instagram, cash out refinance for one family owner occupied property. For a conventional loan, the max loan to value is 80%. This is for owner occupied properties. 80% is your max. FHA 1 to 4 family. Let me rewind that. For conventional, your max for one family, 80% is the max for cash out refinance. For FHA, for 1 to 4 family, FHA, max cash out, 85%. For a home equity line of credit, the max home equity line of credit you can get on an owner-occupied property is 90% of the value, or 90% LTV, all right? Now, for a conventional loan, for 2 to 4 fam, and this is, again, owner-occupied, the max you can go on a cash out, 70% cash out. Okay? So 2 to 4 family, owner occupied, conventional, 70% cash out. For a home equity line of credit, on a 2 to 4 family, owner occupied, you can go up to 80%. Matter of fact, you can probably go up to 85, but I'm gonna just call it 80% for this conversation. All right. So that's what you can do for your owner-occupied property. What's up, Alexis? That's what you can do for your owner-occupied property, cash out refinancing, okay? Now, second homes on conventional, you can go up to 80% as well on a conventional loan. You can go up to 90% on a home equity line of credit. On investment properties, you can't do cash out refinance on FHA on investment properties because there's no investment properties allowed with FHA. All right. Only owner occupied rental properties or owner occupied multifamilies, you can do 85% cash out refinances on FHA. But for true investment properties, conventional is the only product that allows you to do cash out refinance, and you can go up to 70% of the value. So that's cash. And home equity line of credits with investment properties, a lot of traditional banks do not like home equities on investment properties. So you will have to find a non-traditional lender that will do a home equity on a true investment property, but they're probably going to cap your loan to value somewhere around between 60 and 65%. Maybe 70% if you find a very aggressive lender, but the rate on it will probably be astronomical. All right. Why they don't like it? Because it's based off of investment. So what if your tenants don't pay, right? With banks, what everybody got to understand, banks look at one thing when you're talking conventional banks, especially since the market crashed a couple years ago. We're looking at one thing, your ability to repay. So if your ability to repay is not there, and we know you're dependent on rental income to make this deal work, and what if the tenants don't pay? That means the bank ain't gonna get their money. So they rather not do it on a true investment property because if somebody's going through hard times, right? And they may not have the money coming from their personal business or their personal job. They lost their job or whatever. Now these tenants stop paying. Now the bank is going to be, they're going to lose their investment, and now they're going to have to foreclose, and banks don't want to do that. So that's why they don't really do it on investment properties like that. It's just, it's not there for them. Now, if you live in the property and it's your owner occupied, they'll do it because the thought behind it is, hey, that person needs a place to live, so they're not going to let their house go into foreclosure. You know what I'm saying? So you got to look at it from the bank's perspective. Got to understand that we just came out of a crash, a great recession 10, 11 years ago. And if you listen to all the pundits and the experts, and everybody's telling you we're going to enter into another recession, which who knows? Personally, in my opinion, if it happens, it happens. If it doesn't, it doesn't. That's why you got to make sure you're building up your cash flow and you're investing into not just real estate, but you're investing into other businesses that can bring you cash flow to bulletproof. Cash flow is a bulletproof vest for any type of hardship, whether it's medical, health, whatever. Very tough to find a HELOC for investment. There are a few, but it would take a while to find them. Yes, Edgar is right. There's only a handful of lenders out there that would do um, investment property, home equity line of credits. But a lot of them, they don't like investment property, home equity line of credits. They rather just give you a first mortgage and do a cash out refinance on that investment property. So that's all I really got to say about cash out refinance. No, that's not all I got to say. You see these numbers, right? 90% on a home equity line of credit. Be careful with going up to 90% because that's based off of today's value. So if that market starts to depreciate, then you could be over leveraging yourself. Sorry if you address this. I have a duplex with a current 88K HELOC. The market value is 230. Would you recommend HELOC or cash out to access the equity? It depends. It really depends. I will need to look at your financials, Michael, to determine exactly what's the best option for you and kind of give you a side-by-side comparison on that. So shoot me an email, matthew.garland@flagstar.com. Put in the subject line HELOC versus cash out refinance, YouTube, something like that. And then, I can answer that question and we can do a deep dive into it. The bank is Uncle Sam. With the cash, they will not lose. They want the slice of the pie hot out of the oven. I disagree with that. I disagree with that. Um, the bank don't want your house. The banks do lose. The banks lose millions and billions of dollars. I know it's a joke, but everybody says things like that. But the banks will lose. They do lose. And then when they do lose, then the government gets all over them, and then they get fined at the wazoo, for predatory lending and all this other stuff. But, when you try to put out aggressive products out there, people take advantage, but then people don't care. They lose. And then it's just a whole political, like, shit storm, so to speak. And, things happen. But I ain't going to get into politics or anything like that. That's not my lane, but whatever. But so you guys understand cash out refinances. That's how it works. Use it carefully when you're doing cash out refinances, home equities, BRRRR strategies. Be passive aggressive. Don't over leverage yourself. Try to get the equity to reinvest into other properties and do your thing that, but just, do everything with caution because you always got to put in the back of your mind that if the market starts to depreciate, will your properties be upside down? Will your tenants continue to pay you? You always got to think about the worst case scenario. One of the biggest mistakes that I made in my career when I first got in this business, 16 plus years ago, when I had a lot of properties, is that I did not plan for the future. I did not know the market was going to crash. I had no clue about any of this stuff. I was just ripping and running, young, dumb, and full of you know what, right? So I didn't understand. And I was just over leveraging myself on many different things. And when the market crashed, I lost everything. So I don't want any of you guys to go through 90% of what I went through. All right. So with that being said, that's a quick lesson on cash out refinances. That's the max LTVs. I hope you guys learned a little bit. Let me see if you got some questions on my screen. Will you recommend on a BRRR method deal when buying a 3-4 unit? Yes. Listen, I'm a fan. I'm a fan of BRRR, right? Or my 4-3-2-1 strategy. You know what I'm saying? Like I'm a fan of using real estate, using equity to buy more real estate. Big fan of all of that. But I'm telling you just to be passive aggressive with it. Do it, but make sure you can handle those mortgages, those debts, because at the end of the day, a tenant is not guaranteed to pay you a dollar. You know what I'm saying? So just, yes, I'm a fan of it. I speak about it at seminars. I speak about it with you guys. My 4-3-2-1 method is basically BRRRR simplified. You know what I'm saying? Just be careful. Are you available for advice regarding buying rehab costs? Listen, Apollonia, you got a direct line to me. As a first-time buyer, will you or do you advise to which the loan program is best for the situation that one gets on? Yeah, absolutely. So my job as a loan officer, right, is to review your financials, okay, and to analyze what you can qualify for first and foremost, what you can afford. I should reverse that. What you can afford first and foremost, and what you can qualify for second. And then from there, I take that information and try to map it with your goals and your aspirations of being in the real estate business, whether it's owner occupied, whether it's fix and flip. And then I put together this mortgage plan, AKA the blueprint for you. And then now it's on for you to execute it and live your best life. My goal, now, when you get into rehabbing your property, when you want to look for property, am I going to be there to give you advice? No. I'm not a real estate agent. I'm not a contractor. I'm not any of the above. So I will not be the guy holding your hand during that process. My goal is to make sure you understand the numbers aspect. I am the mortgage guy. That's all I do all day long. Do I have knowledge on flipping and rental properties? Yes. But I'm not going to share my opinions so much to you guys because I'd rather you work with the experts in that field. My expertise is financing only. What? Even if your property value lower due to market fluctuations, as long as you lock in your value at its peak and you can pay the mortgage, will the bank try to foreclose? No, the bank is not going to foreclose on you unless you're missing payments. That's it. If you're missing payments, yeah, they want their money. But if you're making your payments, your house can lose 50% value in it. And as long as you're still making that mortgage payment on time, the bank is never going to bother you. Edgar says, you're speaking facts. We did a HELOC for Max in '08. We moved to a different state and needed to sell, but the market was crashing. We got stuck and had to do a short sale. Learning lessons. Exactly. Listen, that's why I'm telling people with the BRRs and everything like that and the over leveraging, all of this is fine and dandy. Great. This is what's available. Just because it's available, like crack is available, cocaine is available, right? But are you going to do crack and cocaine every day? You see what I'm saying? You can go buy a gun and murder somebody, but don't mean you should do it. This is available. Don't mean you should always do it. You gotta, I'm just keeping it real with you guys. And I'm just like, for the replay, y'all watch this. Listen, I'm not trying to be stupid or anything like that. I'm just being real. Like, just because this is available, you got to exercise good caution, right? You got to use your God-given common sense to know when's a good time to execute this, when's a bad time to execute this. You have to not only be on YouTube, Instagram, but you got to be in the newspapers. You got to pay attention to your local markets where you're investing at. You have to have your realtors in play. That way they can give you the updates on market conditions, trends, fluctuations, all of that good stuff. You know what I'm saying? So you have to be in line, in a zone to know what's happening, to know, all right, when do I need to, I'm at my peak. I'm at my peak. Should I exit this or should I stay in this? You know what I'm saying? Like I was speaking to a home seller today here in Valley Stream. She sold her house for a record price in Valley Stream, New York, like 790 for a single family. She said, Matt, I saw the market going crazy, so I rolled the dice with it. And I got the top of the market. She said, I won. But now on her buy side, she knows she's going to lose because now she's going to pay it overpriced. So she had to pick her poison, but she won on her sell. She's gonna lose on her buy, but she made hundreds of thousands of dollars. So she's good. You gotta be the same way. You gotta move through this like a thief in the night. You gotta know what the hell you're doing. You know what I'm saying? So my battery's at 10%, and as y'all heard me earlier, baby boss took my charger home and I don't have no charger. All right, where in the process do y'all investigate the investment property? What do you mean investigate the investment property? That sounds crazy. I don't know what you're talking about. I don't know what you're talking about. What do you mean investigate the investment property? That just sounds like you trying to do something that you ain't supposed to be doing. If you talking about investigations, collaborations is the key. The more we do it, the less we all lose. But look at the Jews all day long, they collaborate. Listen, I was having when do we order the appraisal? When we get a contract. That's when we do our due diligence. But I was having a conversation earlier with someone in my DM on Instagram. We were talking about how other communities, especially like the Jewish community, I got a lot of Jewish friends and I love them and I love how they move, right? They move with religion and they move with group economics. That is a model that we all need to follow in all of our communities. We need to take notes from what other communities are doing as a whole. And it's not just the Jewish, it's the Indian communities, it's the white communities. The only communities that don't collaborate like that or have the group economics is really the African American and Hispanic communities. We're always competing against one another instead of collaboration. Collaboration is greater than competition. I don't know if y'all can see the shirt, but collaboration is greater than competition any day of the week. Look, I'm wearing my man Lucci Rentals hat, right? Trap lord. I'm not a trap lord. I'm a landlord. This is a collaboration. You see what I'm saying? Group economics is the way we win. I'm gonna take it to another level. I'm gonna put on my man Tone hat right now. Make real estate great again because collaboration is greater than competition. You know what I'm saying? Group economics is how we all win. Moral compass established through religion and group economics is that's how we all win. And a lot of other communities are doing it, but guess what? We're doing it too. We are starting that path for our grandkids. Our grandchildren are going to run this place because of what we all are doing today, for what we're doing right now on this YouTube channel, for what we just were doing on my IG Live. We are going to change the dynamics in our entire generation, the DNA of it, right? As long as we, the adults right now, our children's children are going to benefit from this. Baby's boss kids in the future are going to be bosses. You know what I'm saying? Because of what baby boss is learning today. Saturday, she's in the office. She may not know what's going on, but she's in the office. My other son, he's working with his mom today. This is how we change the dynamics of our entire generation. You know what I'm saying? So that's all I got for y'all. There are plenty of opportunities, but exactly. There's plenty of opportunities for us. But so before I go and before my battery dies, seriously, I need everyone on here to like this video. Like it, comment, share with your community, leave a comment. Please, because I want to grow this YouTube platform. I want all you guys to really, really, really share this with your community. So make sure you like it, comment. Prince with the dreads, aka Johnny Dawkins, I see you. Like it, comment, share, subscribe, spread the love to your community. My battery's about to die, so I'm about to be out of here. But remember the cash out refinance. I broke it down in the beginning of this video. Email me if you need to reach me, matthew.garland@flagstar.com, or send me a DM. Sorry, it's extremely difficult to reach me for some people. I know. Trust me, my man Prince with the dreads, that's my guy. He can tell you firsthand. It's hundreds of people coming at me at one time. I'm doing my best. My team is here working on a Saturday. I'm here on a Saturday. This was an impromptu. I didn't even know I was going to do this. But listen, like, comment, share, subscribe. I'm trying to get to everybody. I will get to all of you. I will speak to everyone who's reaching out. I am truly grateful for everyone who's showing me love. Kim, the link will be up next week or 10 days. You can buy the shirts. You can get everything. I don't need an office in New Jersey. I'm in New York. You out, Bindi? How long you been at work for today?
Excuse me?
I'm asking you a question.
How dare you ask me that question?
How long have you been at work
How
today?
dare you ask me that question?
1 hour? 2 hours?
I was here since around
10 o'clock? 10 o'clock on a Saturday. My sister's here with her local youth them. All right?
So much.
How many pre-approvals you did today?
I did 3 pre-approvals.
Uh-huh.
And then I emailed people, please send me your docs when you do the application.
Come, Bendy. Come tell them real quick before my thing. All right, whatever.
Oh, yes.
Send your docs.
Send your docs.
Gigi.
Make sure you include me on the email to Matthew.
Yes. Tell them, Bendy. All right. So my battery about to die. I'm about to get out of here. I need everybody to like, comment, and share this. Matthew.garland@flagstar.com is the email. Shoot me an email. Put cash out, refinance, YouTube live in the subject or something like that. Or DM me on Instagram. I answered 120 DMs today alone. I still probably got another 150 more. I'm going to get to all of them. Matthew.garland@flagstar.com is my email. All right? You can email me with any questions. I'll get on the phone with you. I'll help you out. If you're looking to get pre-approved, click the link in my bio and on my Instagram. Matter of fact, I'm going to put the links in the description with my email, with the pre-approval link, everything that you need to contact me. I love, respect, and I'm truly grateful for everybody continuing to support and check in with me. Like, comment, share, subscribe, and I'm out.